I know everybody wants Bitcoin to go up, but going down is good too. That's how you get bargains, right? Oh yeah, 3 trade setups for you today, including a Forex setup. How about that? Hi, this is Tim from TradingStrategyGuides.com. Yes, I know we've got an open trade on Bitcoin, but it's locked in, so I'm all about getting in with a new opportunity. I mean, I told you about this on Wednesday, so this is not really a surprise, right? Plus, I've also got a new one on Ethereum Classic and the US dollar Swiss franc. So we're going to be a little out of sequence this morning. I'm not going to talk about the open trade on Bitcoin until I'm ready to show you the setup. And we got quite a few charts to look at, plus factoid of the day, Bitcoin and Ethereum setups, and then we'll get to today's trading maxim. Hang around. Remember to click the subscribe button and hit that bell so you don't miss any of our trading goodness. All right, let's hit these charts. This is the US dollar Japanese yen pair, and it's been extremely cooperative. The setup worked as it was supposed to, so I'm going to check that RX box. Sorry, that's CrossFit speak. It means that it worked as prescribed because, you know, RX and prescriptions and all that stuff. Anyway, I entered this on Wednesday's close, or just ahead of Wednesday's close. It hit our 1 ATR target yesterday. I closed half for profit and set the stop at break even on the second half, and I'm still in it. US dollar Swiss franc has been less than completely RX. I firmly believe this is headed up because of this really nice uptrend here, making this kind of an ascending triangle. Plus unity. That is a huge strong level, and sellers keep pushing it back down hard right here. So I want in this because when it breaks, it'll travel with huge momentum. I'm going to make a little change to the rules just for this time. I set the top of this at 1.0000, okay? I am willing to buy a daily close above this triangle right here, and I'll hold it as long as I don't get a close below the triangle here, okay? This is a small change up, and the reason is because I really have a lot of confidence in this push up in this ascending triangle right here. Typically, I would close it if I got a close back inside the consolidation, but this price action right here keeps pushing it back into the consolidation, and it keeps trying to push above it. So if I get a close above the triangle, I'll take it, and I will not take the loss on it until it closes below the triangle. Now, with that having been said, my 1.5 ATR stop will still be in play, and I will never risk more than 2% as usual. The only difference is I won't be closing this on a return to the consolidation, only a close below the ascending triangle. Remember, sometimes trading is about using your head, but you only change the rules for a very good reason, and it should be well thought out, not something that you just came up with off the cuff. And the rules should never include risking more than your usual 2% or whatever you risk on your trade. You never go all in, no matter how good the trade looks, and this looks really good right here to me. Well, the gold trade was a disappointment, but it is what it is, right? What's the old maxim? Don't cry over spilt milk. Anyway, I took the loss on this daily close back inside the range on Wednesday. I think this is going to be heading down from here, but I don't see any way to get into this short right now using any of my strategies. So I'm done with gold for right now. We'll keep an eye on it though and see if something new comes up. Okay, this is American Micro Devices, AMD. It pushed down here yesterday through the bottom of the range, but it was just a head fake. But still keep an eye on this because this is making a nice downtrend and it could explode to the downside. Coca-Cola closed below the Coca-Cola closed below the descending triangle on Wednesday right here and closed back inside the consolidation on Thursday. So I took a 76-cent loss on this, closing it back inside the consolidation. Okay, I'll be holding the Bitcoin open trade discussion until after the factoid of the daytime, not to be confused with the nighttime, which it may already be for some of you. Sorry, I think the first rule for a master punster is never pass up an opportunity for a sick pun. If you guys have been on my channel for a while, or in my trading rooms, you probably already know a little bit about me. You may also know that one of my most favorite hobbies, other than CrossFit, is drones. Yes, I fly drones. I'm not an FAA licensed pilot yet, so I can't officially use my drone photography in any of my videos. Anyway, this news nugget is not about me and my drones. This is about UPS and their drones. And the news is the FAA, for those of you outside the U.S., that's the Federal Aviation Administration. They're the U.S. government agency that regulates the airspace and such in the U.S. Anyway, the FAA has decided to let UPS use drones for its nationwide delivery service, a first for the industry. Up until now, UPS has been using drones to ship medical products and specimens on the WakeMed Hospital campus in Raleigh, North Carolina. And that's gone so well that the FAA told UPS they could ramp it up. UPS says their FAA certification has no limits on the size or scope of operations, and they're planning on working with over 100 hospital complexes in Phase 1. Guys, this is huge. This will go a long way to cutting shipping costs in suburban and rural areas. And I don't want to get too far off topic, but I think this piece of news dovetails right in. Skydio, an American drone company, introduced the very first autonomous drone this past week at a price point which hopefully will compete well with DJI, the Chinese company that currently holds about 70% of the drone market. And for complete transparency here, so far, all I've got are DJI drones. Up until now, they've been the best, but I want to take a look at this Skydio drone for sure. So, if UPS can capitalize on that new technology, then I think we're going to be seeing a lot of drones in our future. Let me know in the comments below what you think of drones and using drones for commercial purposes like UPS plans to do. Hat tip to the Morning Brew for this news. I'll put the links to all this stuff in the description below. Alright, let's take a look at Bitcoin and Ethereum Classic. As you may know, we've got a Bitcoin short trade in play right here. That's what this green is right here. We hit our target right here and set our stop to break even, and that's where it's been. So for right now, I'm going to shut off this indicator so that we can look at the chart normally. Okay, so I've drawn this range at the top of this candle right here, which is around 85.30, and at the bottom of these candle bodies right here, which is around 80.50. You can see the range is confirmed by this precipitous decline in volume and this decline in volatility. Of course, the volatility is represented by the ATR, or average true range, which is simply an average of the length of the last 14 candles. So here's our Bitcoin trade plan. We will simply buy a daily close above this range or above 85.30, or we will sell a daily close below the range or below 80.50. On the breaking candle, to enter a full-size position, we want to see this volume bar reach up to the volume average or beyond. If it doesn't quite reach the average, but it does reach 75% of the average, I will open a half-size position to reduce risk. You can calculate that by taking the volume right here and dividing it by the volume average, and you should get 0.75. If you do not get 0.75, stand aside. Let the trade go on by without you. The stop loss will be 1.5 times the ATR. The first target will be 1 times the ATR. That means on the breaking candle, you want to look at this number right here, which will be the current ATR at that moment, multiply that by 1.5, and put your stop loss that far behind the entry, not behind the range. You will then multiply it by 1, of course, and put your target that much ahead of the entry. If after entering the trade we get a candle that closes back inside this pattern, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically I do this with 2 positions. The first position has a hard stop loss and a hard take profit at the appropriate prices. The second position will have a hard stop loss and no take profit directly associated with it. I also only risk about 2% of my account on each trade. No single trade should make or break you. That's the setup on Bitcoin. Let's take a look at Ethereum Classic now. You can see that Ethereum Classic is pretty much in the same consolidation as Bitcoin. This seems to happen a lot with the cryptos. I don't think you can actually use one as a signal for another, but I think you'll find them trending and consolidating at roughly the same times. Anyway, you may recall that I closed this for a small profit because it was consolidating. I think I may have closed it here or here. Anyway, this pattern right here is what I would call a continuation triangle, and we would anticipate that the pattern would break in the same direction as the incoming trend. And you can see that we've got the same precipitous volume drop off that Bitcoin has, and an even better volatility drop off here than Bitcoin. Now typically I would be good with a long or a short out of a continuation triangle like this. But in this case I think our upside is hampered by the bottom of this trading range right here. So I'm going to nix the long trade out of this pattern and only look at the short trade out of the pattern. So here's our trade plan on Ethereum Classic. We will simply sell a daily close below the triangle here. On the breaking candle, again, to enter a full-size position, we want to see the volume reach the volume average. If it doesn't quite reach the volume average, we will take this volume number and divide it by this volume average. If we get at least 0.75, we can go half size. If we don't get at least 0.75 on that calculation, we will stand aside and let it go by. And how about that text magically appearing right there? As with Bitcoin, our stop loss will be 1.5 times the ATR. Our first target will be 1 times the ATR. So on the breaking candle, you'll take this number, multiply it by 1.5, and you will put that behind your entry by that amount, and your target will be below the entry by that amount. If after entering the trade we get a candle that closes back inside the pattern, we will take the loss right then and not wait for it to hit the stop loss. Our intention is that the breakout from these patterns should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We'll then follow stops as price moves in our direction until the market takes us out. I would also like to point out that this is very close to the point at which these patterns typically break. If this fizzles out the side right here, just stand aside on it. Okay? You only want to take a break to the downside with good volume. And that's the Ethereum Classic setup. So, you guys got 3 trade setups today. Wow. Just call me Butter because I'm on a roll. Sorry, don't forget the Master Punster rules, okay? Anyway, I tell you this every time, but I want you to remember, I'm not trying to tell you what to do. I ain't your mama. I just like saying that. I'm just telling you how I handle these trades. If you want more details about what I do, look below this video for a link to my trade management video. And if you've got a trade management plan that works better for you, please use it. Trading is a very personal thing. Things that work for me may not work for you. You have to understand your personal psychology to find the best strategies for your own trading. I show you how I do it so that you've got a starting point. You go from there and you make it work for you. And psychology, of course, in my opinion, is the most important part of trading. And I use trading maxims. And anybody who's been around a while knows how I feel about them. They're my way of handling my personal psychology. And today, we're going to dig into the archives again. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. These maxims come from everywhere. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure that you always do the right thing. Feel free to borrow from my list. And like I said, we're going to dive into the archives for the maxim of the day. Tim's trading maxim number 35. The markets can remain irrational longer than we can remain solvent. And this comes from Keynes or Schilling or somebody. No one is exactly sure who originally said this. John Maynard Keynes is an early 20th century British economist and father of the Keynesian school of economic thought. Gary Schilling is a mid to late 20th century American economist, or it could be some other unknown personages. I'll link all these bios below. I just know that the sentiment here is very right. And this is the very reason why I typically close my trades when they go back into the consolidation. It's also why I don't load onto trades when they're going against me. Some traders will tell you that the market will always be back, and you know what? They're not wrong. The market has been exactly where it is now at least 1,000 times, and it'll be back right here again another 1,000 times. But can you hold out till it comes back? I've tried that game. It didn't end well for me. I like to cut off my losing trades while the loss is still small. It's much easier to make up at that point. Plus, that money can be used to get in a more productive trade. You could potentially win 2, 3, or 50 trades while you're waiting for the other position to come back. Think that one through. Learn how to be okay with being wrong, and you'll be a much better trader. Remember our Bitcoin trade plan here. We're going to buy a daily close above the range or above 85.30, or sell a daily close below the range or below 80.50. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And here's that Ethereum Classic trade plan. We're going to sell a daily close below this triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And last but not least, our US dollar Swiss franc trade plan. We're going to buy a daily close above this ascending triangle or above 1.0000. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR. Your first target is 1 times the ATR. And remember our little change up. We will not take the loss on a close inside the triangle. We will only take the loss on a close below the triangle. Of course, you will definitely take the stop at 1.5 ATR. Remember to click the link below to the trade management video for more details. And you don't want to miss any of my trading picks. Sign up for my free Trading Picks email list to be sure you don't miss any of them. I'll be sending out 3 or 4 trading picks a week, or 3 on Friday, who knows? Everything from stocks to futures to cryptos to Forex, and you'll get to see them first. Plus, you'll get first notifications of anything special that's happening. And the best thing about it is, it's a freebie. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. We'll have a nice trade setup or 2 on each one, and maybe some extra Q&A or training on Wednesday. And you know, I apologize for being late on Wednesday. I thought I had a real handle on how long it takes to edit, render, and upload the video, But I was off by at least a couple of hours this past Wednesday. I promise I'll do better. And don't hesitate to ask any questions you may have. I try to answer questions as quickly as possible. And remember, the only stupid question is the unasked one. Remember to tell me in the comments what you think about UPS using drones for delivery and, drones in general. Follow me on Twitter because I post things there sometimes. My Twitter link is below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching. Thanks for subscribing. Don't forget to hit the thumbs up below. Have an awesome weekend, and I'll see you next time.